Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review. So before we get into it, if everybody can read through the disclaimer. Those on our YouTube live stream, I cannot see the chat, but I've given you the link so you can join us in the webinar room and talk to us if you want to. For those in the webinar chat box and question and answer box are open. You just need to put your questions in there if you want to talk to me. I can see both on my own screen. So please just read through the disclaimer. It's been a highly volatile market with the US data coming out over the last 48 hours. We still have some more data coming out from the UK and the Eurozone this evening for their interest rate decisions. And I believe from the FMC statements, they may be suggesting 3 interest rate cuts next year. So we'll wait and see. So of course, the US dollar has gotten weaker on the back of that knowledge at the moment. All right. Now, if you're new to the webinars and you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time Forex trader, been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And through the week, you can connect with us at our website, acy.com, go to the market news tab, or our YouTube channel, ACY Securities Australia. Or if you want to connect with me personally, you can get me on Twitter and LinkedIn. I've had a couple of emails asking me about my weekend analysis that I generally do. Just having a bit of a break as we're getting to the end of the year, but I should be getting back on board with that in the new year. I'm just, I guess, getting a little bit tired, getting into a little bit of a holiday mode as we get to the end of the year. And so if you want to follow me on Twitter and LinkedIn, those are my handles. And if you want to get access to our Telegram channel, then contact Nathan.bray. He can give you access to that. And if you want to get access to my chart layouts and templates, then Nathan is the guy too. So I'll put his details in the chat now. There we go. All right, so let's get into the news first of all. So in fact, it's just coming out now as we're just talking. So the Swiss Central Bank has just had their interest rate decision and they're having their press conference right now. So no interest rate change, still at 1.75%. So the big ones now coming out are the UK interest rate decision at 10 p.m., Eurozone interest rate decision at 11:15 p.m. with the then press conference at 11:45 p.m. In between there, we have the US core retail sales, and unemployment claims. So it's going to be a very busy window between, say, 10 and 12. All right. Highly volatile there. And then tomorrow we do have the flash manufacturing and services PMI data coming out for the Eurozone countries and the US. All right. So be very aware of these interest rate decisions. I'm not going to be doing anything until we get past these interest rate decisions, but I'm just going to talk about the levels I'm watching, what I think's unfolding. But I actually thought we were going down this week, but we have obviously been moving up since the US interest rate decision, but we'll have to wait and see how the week finishes. But everything's dependent on what comes out on these interest rate decisions at the moment. So it's very difficult just to say, well, I haven't actually traded until we're getting past these things this week because it's just that volatile. However, keeping my charts up to date and looking at what I might be able to do post data. Now, let's go to the dollar index. Just before we do, we did also have it coming out on the news front today. We had early in the day the Aussie employment rate and actually upticked. And I know the Aussie went up, but went up in the face of that being, well, unemployment rates gotten worse by 0.1%. Change theoretically has gotten better, so I don't quite know how that works. So that figure probably made the price go up because the reality is that the RBA wants unemployment to go up. That's one of the factors that will help us get inflation down, or seeing that inflation is starting to move in the right direction. So if that's the case, then there's a lesser chance of an interest rate hike, which theoretically would then be negative for the Aussie dollar on that release. But it all depends how the market wants to react. All right, so let's get to the dollar index first of all. It's not able to hold the area I was watching within the range of last week, and we are having a week down. So at the moment, if we drop to the weekly chart, it's retesting the 62% level. Yes, we could still hold there this week and still be moving back up within the bigger swings here. Big swing up, corrective pullback to the 62. Is this area going to hold? So that's an area to watch at the moment on the day chart. If we get, say, a reversal day today at the 62 level, we may be having a double bottom forming here, okay? So it's worth watching that today. How does that finish today? If it clearly closes below the 62 level, then of course, then the downtrend that we're seeing here is going to continue down. So just watching how that's positioning itself over the next 24 hours. S&P 500 shooting up with the idea that interest rates are going to get cut. So we're probably going to come up and challenge this high to what is it, about the December 21 high. And then what does it do up there? I mean, there's not a lot of room left. If you're wanting to get long, there's not a lot of room left to the major high. So you probably needed to get long before now. Although, you know, if we're going to test the high, we could still have a pullback. So you could monitor a pullback back down to maybe this monthly top, 46.11, for another higher bottom to form. Other than that, it's getting very high up there at the moment. All right, so let's discuss the euro dollar. Now, of course, we've got the interest rate decision coming today. And this is my 4-hour chart. And these are the areas I was watching within the range of last week, but with the FOMC statement yesterday, it's just sliced straight through those levels. And we are having a week up. So we really need to start to monitor this range if assuming we may have topped here, then we want to watch this range to come up to put some form of lower top in. That's assuming that we have topped here. You know, maybe with the data coming out at the moment, we may need to shift our assumption. But even on the day chart scale here, right, that's the lower bottom here. At the moment, unless we take out this high, the trend is actually down on the day chart, and we're looking for a lower top to form. This is just corrective of this. This was the move that changed the downtrend to down. All right. We failed at the 62% level of this larger range up here 2 weeks ago. So are we going to be able to break that high, or are we coming up to form a lower top on the day chart? So, you know, all I can do is ascertain what the trend is. The day chart trend is quite clearly down. I know the news announcements very bullish yesterday, but we'll wait and see what the interest rate decision does today for the Eurozone. There's a 79% level here. Can't quite read the number, so let me just get this one moved over. It's at 109.53, and the 62% level of the larger range is at 109.59. So there's an area there to watch. There's also an area of day chart resistance up here at 109.65. So 109.53 to 65 would be the area to watch today if we can get up there. What happens up there after the news events of today? So if you're not already long, it's very difficult to get long in the face of the news items coming out, because there's no guarantee that the news item will drive it up there. So if you're going, I'm going to get long so we get driven up, and then the news drives it down, then you're going to be wrong. So if you are not already long in a profitable position, you really just have to wait for the news to finish today and see where the market's positioning itself. So that would be the area that I would watch up here at the moment. Now, are we going to form a lower top on the day chart as we've moved down to a lower bottom here? And that's a very obvious area to watch. All right. Euro yen. Now the euro, let we go to the day chart, just tidy a few things off. Dollar yen is obviously moving down. Yen's getting stronger in the face of that prospect of maybe US interest rate cuts. I did say Tuesday, watch this area could get retested and it could hold. All right. So we could actually bottom down here. We've had quite a long, that fib I got drawn there is last week's range, but we've got this whole range here that we've been moving down. All right. It's about 4 weeks old. So we may be getting due for a bit of a bounce back up within that whole range. So we could actually hold at this quite clearly an area of strong support. We false broke it last week. Now it is counter trend, so you need to see a very clear setup for yourself that you like that could tell you that we're holding here. But and again, it's got the euro in it, so you're gonna have to wait till the news has passed. But let's have a look at it on the 4-hour chart. Putting aside the news at the moment, it's closed below, but now we're back above. So if we close back above here, we're getting a reversal in this area. Then you might say, okay, if we break the candlestick higher, that's my trigger to get long, to trade up from the clear, strong level of support. All right, so you're gonna have to wait and see what interest rates bring. But at the moment, it is holding on support. Now, from a rally point of view, it may only rally back up to 156.58, this area of old support through here. So after the news, does it gyrate around this level of support and hold? Does it spike up to the resistance level and hold? Later in the day, okay? So those are two levels to watch. It is a bit of a difficult one at the moment. We're definitely getting lots of yen strength, so you'd have to be brave to maybe be a buyer down there. But what is your signal to get long up from the bottom there? It's simply a reversal candle on the 4-hour chart. But this candle is going to finish at my 8 o'clock, so I've got 7:14. Then you're probably going to have to wait for the next candle to finish, because as that candle's forming, you can have the euro interest rate decision. Okay, so you're probably 2 4-hour candles away before you can make a decision on maybe trading off the 4-hour chart. All right, euro pound. Really a tricky one to trade at the moment. It's just coming up and feeling a bit of an imbalance up here, especially when we've got the euro and pound interest rate decision coming out. So all I can, most clearly understand is from the monthly chart perspective, we've come down to monthly support. And, we're having a week up. But we're in a downtrend on the weekly chart, so we're probably coming back up within this weekly range. All right. There is weekly support here. That was, it's now resistance. All right, which doesn't overlap with anything that I really like. I'm going to be looking at 62 to 79% area of the range. So that really doesn't tell me anything too much. So I'm going to get rid of that line. That's a previous level of weekly resistance over here, I believe, which I'm going to take off, because if I was looking for a setup at the moment, trying to trade with a longer term trend, although hitting monthly support here, we could be just simply coming all the way back up to the top of the range. So it's going to be difficult. I'm going to have to wait and see what the market brings after the interest rate decisions. But back to the weekly chart here. Down on monthly support here was an area to fish for a long, and where because this is often a very range bound pair, where's the next great opportunity to get short? It will be back up here at 87.06 to 87.21. All right, and that's only 100 pips away. So theoretically, we could get there this week, depending on what the interest rate does in the pound and the euro today. In fact, we could get up there today if it really wanted to. All right, so just gonna have to monitor that at the moment. Certainly my area to watch for a short would be up here, back up to We basically false broke monthly resistance and we traded back down to monthly support. So I would anticipate maybe we're coming back up to 87.06 to 87.21. Weekly, monthly resistance area up there. So you could trade to the upside, but you'd have to start to watch the 4-hour trend, look for a pullback on the 4-hour range. But until we get past the news, it's hardly worthwhile even trying to put a fib on there, because you're just going to have to wait until the price action develops past the news to start to look for a long if you want to trade back up the range. Okay. All right, let's get into the pound. Now we're still within the range of last week. This is my 4-hour chart, high to low. And that was the level I was discussing on Tuesday, and really it's the same level I'm watching, approximately 126.79. 126.76 is the 79% fib to 126.79. So that's the range of last week. Now, of course, we could come up to try and test the highs up here as well. All right, so we'll just have to wait and see what the interest rate does. Okay, you can see we have two tops up here at 127.33 or just short. And to the left, there's lots of tops here as well. This is where resistance started to form before this massive sell-off. All right, so we've come back up to where the massive sell-off started. Is it going to come up? Yeah, that's theoretically two lower tops. There's a minor lower bottom here. And now we're going to come up and put on another lower top. I know price is moving up on some of these pairs to the US dollar after the US news yesterday, but on the euro dollar, the trend is down on the day chart. And potentially, it's difficult to say if this is up or down. I just know there's a minor swing point in here, which isn't reflected by my indicator, but there is a minor. I'm just going to put a little line in there. There's a minor little swing point here. So if that's a minor swing point, then this is a lower swing point to that area there. So in my mind, potentially that could actually be in a downtrend at the moment. And we're looking for another lower top to form. So we do have a lower top in any event, or we form another one. So, looking up at the high areas up here today after the news items, primarily 126.76 to 79 are up here. Now it is tricky at the moment because with the US dollar news yesterday, we could, depending on how the market's feeling about that news, we could have another 3 days up if the market really wants to. So we'll have to wait and see. It's worthwhile when we have a news announcement like yesterday, where now we're faced with 3 interest rate cuts in the US. It's worthwhile the next day just waiting to see what the next day does. Does it go up today but then start to reverse? Or over the next 2 trading days, does the movement come to an end and you see a clear rejection candle, a clear signal on the day chart that, okay, that buying pressure that we're seeing on the pairs to the US dollar at the moment is coming to an end from the news event. And as that comes to an end, potentially, are we still faced with the formation of a lower top still forming? Because even if we have 3 days up here, 1 day up yesterday, 2 today, maybe we got again tomorrow. But if we don't take out a high, we could still put in a lower top. And then potentially we're going to trade all the way back down the range. All right, so I'm watching up there at the moment on the pound. Pound yen's is a lot stronger. It's declined to the euro yen because it's actually made a fresh low. All right, so it's coming down to some, or very close to, significant low, 178.116. Now, for all year, this has potentially been up, and a very strong move up through here. So maybe everybody that's long has been getting short. So anybody that got long in the latter end here is getting squeezed out. Starting to see positions turn into losses. All right, so we've been breaking down below actually monthly support, which is 180.41. It's an old high from back in time. And we've broken below weekly support at 180.76. Now, having a bounce down here on support, fraction short, All right, we're just folks breaking last week's low at the moment. It's not a great area to get short at, but the trend is down. So I would, at the moment on this pair, I think, depending on what the news brings from the UK on the interest rate decision, is I think the bias is still to the downside. You need to wait for price to come back up a bit. All right, and I just want to know where. So we're on Thursday. So that's 1, 2, 3, 4. So this is the range of the week. So that's probably going to be the high of the week. So we may well start to cycle back up within the range of the current week's price formation. And then you're looking at your fib levels within the range that's already formed this week. All right, so I would be looking at the moment for, if we do rally, coming up to maybe the 62 level or the 79% level. So I'll just put that in the central area at the moment. All right, from a 4-hour perspective, there's a 4-hour range here. Keep dragging the fib down if the price keeps moving down. That 79% level is nicely close to this little area of support that broke at 182.27. So 182.11 to 182.27 would be a nice area to watch there. We can definitely, well, I don't know whether we can get there today. It all depends what the news brings. I mean, we can most definitely get there, but I don't know if there's that much volatility to get it up there today. But that would be an area to watch over the next 2 days if you start to rally on the pound yen. And it's really within the range of the week that we've been forming this week. All right, now, if we don't get any real rally, then this is the area to watch here, 180.41 to 180.76. So again, we're all dependent on the news. Would much prefer the higher level. Okay, Aussie yen. Remaining rather weak, not as weak as the euro yen or the pound yen, but it's down for the week because we closed just here. So we are negative for the week. I don't actually like price action when it sells off very aggressively and then rallies back up. I'm always concerned that any movement in this area here isn't going to break the low. And, you're selling at very low levels. You only have to look on this pair at the moment. And, if I was looking at a pair at the moment, I might have a look at a different pair. This is definitely in a downtrend, but I think, if I was wanting to engage on this pair at the moment, I'd like to see a nice rally. So at the moment, there's lots of support here. All right, on the daily chart. So, we've already folks broke that area and we aren't able to get down to that area today. So in my mind, I'm still thinking we've got a major double top forming. Let me just get rid of that fib for a moment. I'm still thinking we've got maybe a major double top forming up here. So I just want to be able to sell a rally high up. All right. Doesn't matter to me about what's happening today or tomorrow. I'd like to be able to get set if price can have a rally back up the range a bit. All right. So, I'd much prefer to look at this range here and see how it moves back up the range. And then, 79% level there. So if you actually use the whole range of the movement, 79% level of this weekly, monthly high over here at 97.66 overlaps with a 79% fib. Now, whether or not we can get there or not, I don't know. But really, I would be monitoring this whole range for this to come back up here because we false broke down here to try and get set for some form of lower top to form, this week or next week as we're heading into Christmas. Okay. Or even, it might take till we could drift up here through Christmas and it all goes kind of quiet. So even at the start of the new year, are we back up into this area? And then can you get yourself set for a trade to the short side? All right. So really down here at the moment, if this was to come back into this area of support, then, you'd be within, your mindset to, look down here for a buy position to trade back up the range because quite clearly there's a lot of support through there. So that's not an area where you want to get short anywhere close to. All right. By that point, you need to be risk-free and managing the trade. All right, now the Aussie has moved to a new high today. So it is looking like, on the monthly chart here, it's coming up within, it's in a downtrend coming up back up within the range. It is above the 62% level at the moment. Just above the 67 level. All right, so obviously got some support down here on weekly support, and the US dollar news has been negative, so it's driven this up. All right, so the question is, how high can this get driven up? Now, a great area to watch, because overall this is still in a downtrend. This is just corrective of all this downtrend that we've been having for the year, in line with the monthly downtrend that we're having. All right, so yes, you could look to get long if you really wanted to, but be very mindful that the 79% level is only 60 pips away. And a very critical level of resistance that was operating through the course of the year, if we go to the weekly chart, is this area between 6,800 and 6,805. All right, so really, you're going to find the sellers up here, because this is overall that's downtrend rally. Because here we had, whilst this was very mixed and then we went up, this was really the monthly downtrend here. Then we rallied, then we went down, even though we had a double top, went down, and now we're coming back up. But long-term trend is still down. Up here is where we could fail for then the next decline. All right, so I would be looking for that. Okay, and it says we're only 64 pips or so away from the 79% level. Now today, I don't know how today is going to finish, but at the moment I'm just looking from day to day, seeing if we're going to top out. Got a couple of day chart tops here that we could false break today, and this 66.71 level is just a very long-term monthly level from over here that I've just got on my chart to see how that operates. All right, so I'm just watching, and primarily, if the news drives it up, this is the area I'm watching. We're not that far away from that area. You can see all these tops over here where we had a very difficult, long-term difficulty to get above 68.05. All right, so in my mind, that is not an area to be long. If you're already long, great. This is where you want to take your profits and then start to look for a reversal. All right. But today we could get a reversal by the end of the day. And if we start to, if we close back below 66.71, the monthly level of old support, then that could be the trigger then that we are false breaking these two highs to move down. So I'm just monitoring the day chart at the moment. All right, New Zealand yen. Let's just get rid of that fib for a moment. All right, so the weekly trend hasn't turned down yet. It would need to break this low. Like I was saying on Tuesday, they were at very high levels. And it's too early in the month. We're only halfway in the month to know whether or not we're getting a monthly kind of railroad tracks up there, because by the end of the month, we could be at the top of the month once more. Still half the month to go. But we are selling off from very historical high levels, like all the yen pairs at the moment. And of course, we're seeing a bit of a fundamental shift in the US. All right, so there's two sides of this market at the moment. This could be holding at the 79% level. If we don't trade down and below the 79% level today, and we end up with a positive day today, so some of these pairs I'm just monitoring to see what happens today. We get a positive close today, and let me just go back to my weekly chart. This top over here, if we close back above that top, it's a monthly top, I believe, or at least a weekly top at 88.16, then we could be bottoming here to have another run up. All right, so the weekly trend is still up on this pair. So again, I'm just going to wait to see what the day chart candle does. we close back above 88.16 today with a positive candle. And as well, if we don't really trade down to the 79% level, we're probably putting a higher bottom in here over the next couple of days. So that's what I'm going to monitor. Do we start to maybe get a sign that we're going to be bottoming there for the next weekly move back up to test these highs? Okay, or at least to come back up to test this high over here as a starting point. That high over there as a starting point is where we've topped out this week at the moment. But if we can't commit below here, then we could be dealing with a reversal back up to the upside. Okay. Right, New Zealand dollar, it's a little bit like the Aussie, but just showing a little bit of rejection up there. It's coming up to a weekly level. It's the last weekly level that we moved above before triple topping and then coming straight back below the level. So that level is very prominent to the market. So we've been a little bit short of the 79% level, as we're saying on the Aussie dollar. We have monthly trend down. This is all corrective. All right. So prior to today's movement up, we were struggling at 62.04, which is a monthly level of two lows here from back in time. So we're only at 62.13 today. If we don't close above 62.04, we start to drift below 62, we're probably topping out up here. Because really, if you understand what liquidity is, this top, especially this top, but the 62.04 and this top and above, this is where people have their stops. So if people have got short, they've got buy stops there, all getting collected or all grouped, maybe above this high here. So when price has gone and just traded above that high, it's triggered off all the sell stops. Sorry, people are short, it's triggered all the buy stops. So those buy stops make the market go up. But the only people buying are the ones that are getting out of the market. The ones that are selling are probably the institutions, right? So if we close back below 62.04 today, this is probably just a grab of liquidity. Stops are going off. People are happy to short as people are, closing their shorts because they're buying. Price moves up, comes up to the next resistance level. If you're with me yesterday discussing the 100 pip entry method, that was a prime level to be watching today. Even right now, you could be shorting at 62.12 and putting your stop at 63.12, because this is a clear area where you could anticipate that the market would falter at. So if you did trade at 62.47 today, this clear weekly resistance here, then your stop would be at 63.47. And if if you're a little bit of a worry wart, you could also be at break even by now because you could have gotten the risk out. All right. But in any event, at the moment, if we end up with a rejection candle today, you can see we had a wick on the candle the day before. If we end up with a very wicky candle again today, we could be topping out here over the next few days. So watch, primary level to watch is 62.04. Does that start to be resistance once more intraday to trade back down, I think? All right, dollar Canadian. All right, it's not able to hold that 79% level on the back of the US news. So let's just go to the weekly chart. The weekly trend is still holding its range to the upside at the moment. All right. There's still a possibility that this 79% level, 134.90, so 134.90 to 13500, the figure, still a possibility that we can get a reversal here. We're just having negative days because of the news that's been released from the US. We're trading into, at the moment, very notably, a very bullish candle here, all right, to the upside. And there'll actually be some imbalance in here that we're probably coming down to fill based on the 4-hour chart. All right, so we had a little bit of an area of consolidation here, a very impulsive candle up here. So at the moment, this, I would say, this whole area that we haven't filled yet, if we clearly break below that low, then we're going to come down and test here. But if we reject this area today, then close back above the 79% level, we could still be bottoming out here based on the weekly range. We'll just have to wait and see how these candles form. Tim, yeah, there's still a possibility that the New Zealand dollar, if we just jump back to that, there's still a possibility that this can get up to the 79% level. But at the moment, it's holding at that. It's very much holding at that weekly high there. So there is a chance it can get to the 79. You just have to monitor, But if we close below 62.04 today, we're probably not getting there. At the moment, we're just, you could be monitoring at the moment on the 15-minute chart, 62.04, because we've just dipped below 62 over the last hour, and we're back above. All right. So for those that may want to get long, getting long at 62 with a stop below 62 would be the go if you want to trade up. You want 62.04 to hold as support at the moment. So if you're looking for a long trade, you could be looking for 62.04 to hold as support at the moment. It's about 8 pips away from that level to trade up if you're more on the long side in your trend thoughts. But most definitely, if we can't hold 62.04, because as well, last month's high is at 62.07, we're probably moving back down the range. There's an imbalance here from, with the news of yesterday, there'll be some imbalances on the 50-minute charts. There's one here on the New Zealand dollar that probably needs to get filled. So if it's going to get filled, we may have already topped up here. All right, and we may already be going down to fill the imbalance. So I don't know whether we can get to the 79%. You just have to watch that day chart candle and see what it tells you on the close. All right, so as I say on the dollar CAD, it's looking weak at the moment. Maybe, from the weekly chart perspective here, there's a double top form. But the trend on the weekly chart is still up until we break this low. So what's going to win out? I'm not trading this pair at the moment, but I have been quite clearly watching this 79% level. And if we do get a reversal back above there, it does ask the question, are we bottoming out here to move back up? All right, so it's just worth watching. Dollar franc, it's right on the level I was discussing the other day. We have traded just to a fresh low, but the question will be today, if we go to the monthly chart, we are testing monthly support over here, very historical significant level. So the question will be here on the day chart today, where do we finish in relation to that level? See the 79% level of this range overlaps perfectly on that monthly level. So depending on your viewpoint of the dollar franc, I don't really trade the dollar franc. I'm not that sure about the viewpoint long term of its fundamental picture because I don't really look at the fundamentals for dollar franc. But if you've got a fundamental picture that the Swiss could weaken, this is a prime area where you could be looking for a positional trade. So this starts to get support at 8,700, 79% level as well, and monthly support. In terms of where it's positioned at the moment on the monthly chart, this is almost as cheap as it's been, except for this very spiky low here, since 2013. And the big players in the market know that. So if they're wanting to position themselves to the upside, this is maybe the cheapest price that they can buy the US dollar to the Swiss franc. All right. So again, maybe there's a 100 pip trade entry here. All right. You can be monitoring today. What does this 4-hour candle do? It's a bit wicky at the moment, so you might want to wait for a couple of more 4-hour candles to come in. What does the 4-hour chart tell you here at 8,700? Are we going to get a reversal back up? All right. May want to wait till past the US news at, what is it? 11:30, is it? 11:30 is up with the retail sales. What happens after that? If we start to want to hold above monthly support, maybe we are wanting to move back up from that level. Okay, that's the level to watch. All right, pretty much at the level right now. So if you wanted the best price on monthly support, it's there right now. And of course, you can monitor the 15-minute chart. It's a little bit scatty after the interest rate decision from the Swiss bank, but the current 15, if that current 15-minute candle closes above 8,700, maybe that's a buy for you, and you just put your stop below the low of the day. And you're buying at a very significant support level for potentially a move up. And whether it's a long move up or not, there's a very large imbalance here that probably needs to get filled to the upside. So that being said, as I'm talking, it's starting to bid above the level. Is this a buy here to trade at least back up to fill the imbalance? Okay. All right, dollar yen. Dollar yen quite clearly is loving the US dollar weakness. It's only been able to rally back up to daily broken support this week. And it has moved below now this weekly area of support. So the next critical area for this pair, it keeps declining. Like it hasn't, since it's had now 1, 2, 3, 4, 5 weeks down, it hasn't yet had a rally. It will have a rally at some point, and that's what I'm looking for. Like a rally of significance, like on the weekly scale. All right. Like even when this came down, it had a week up here. All right. So I'm looking for the first week up to start to fish for the opportunity to get short. I don't want to be shorting right at the bottom of this move because that's not the way to trade, not in my mind anyway. So, and as well, in terms of just the most recent day chart swing, which that was the high of last week, came up to 79% level of the range to day support being resistance. All right, at the start of the week is we're almost at the 127 extension now of that range. So in my mind, you're waiting even just on the day chart for the next rally to occur and then look to short that rally if you can get yourself set. All right. All right, so I'd actually be monitoring now the range that's forming this week. Can we pull back up to the 62 or 79% level of the range we're forming this week? Keep dragging the fib down if it keeps moving down. All right, then look to the 62 or the 79% area for the market to hold for the next decline. 145.06 there. That's that weekly high. Let me just double check I'm telling the truth. It's that high there. That will be the level to watch for a rally back up to now to be clear resistance, 145.06, just short of 79% level up here. And there's an imbalance in there. So the price can come up and fill the imbalance. This is where that imbalance there, can price come up to fill the imbalance at some point? And then that is your zone to look for a reversal back down. All right. All right, we'll just finish with gold. Popped up with the news, the US news. That's the weekly chart. So it may be putting in a higher bottom here on the weekly chart, maybe. Well, I say higher bottom. I'm gonna have to rephrase that. We've actually broken a bottom here, so this is where it's going to get. This is where it starts to get difficult because. Sorry, let's just start with the monthly chart. So we're getting a clear rejection of the monthly chart of those triple tops. All right. Now we're on the weekly chart. So that's the weekly chart range. So we have a higher bottom to a higher top. It's a 79% level that's giving us support in line with that weekly top there. All right. It's the day chart that's in the downtrend at the moment. So, but it is looking like that this area here could be the next higher bottom forming on the weekly chart. If nothing really changes now from now to the end of the week, we're going to have a very strong reversal week up, and potentially we're coming up to retest the monthly highs. So that area is 2070 to 2079, those 3 monthly highs that we false broke earlier. What day was it? At the start of the month, 4th of December. All right, so read on the 4-hour chart, then I think you should be, if you want to get into gold, look at the 4-hour range it's forming, which is in an uptrend here at the moment. Look for your pullback to the 62 or the 79% area. If it can pull back for you and set up. All right, in between 62, 79 to then continue up. That's assuming it can pull back. The critical area to watch for resistance are this monthly resistance area at 2070 to 2079, okay? Once it's in that area, we could most definitely fail because we false broke that area on the 4th of December and we could trade back down. All right. So those are the areas to watch at the moment, though it looks like it's maybe, if we have a week up next week, we're putting in a higher bottom on the weekly chart. I'm going to maybe have another go at those highs. All right. So that's my thoughts there on gold. All right. So it's difficult at the moment with all these news items coming out. So it's not easy when we've had a news item come out and the market then goes ballistic because then you have to wait for the market to settle down. But that's trading at the moment. So for those coming in late, just be aware we have the UK news coming out at 10 p.m. We have the Eurozone news coming out at 11:15 p.m. So those interest rates, 10 p.m., 11:15 p.m., pound, euro, dollar. And we have the Eurozone press conference at 11:45 as well. Sometimes the interest rate decision for the Eurozone is a non-event, but then you're waiting for the press conference, and that usually is not a non-event because you're waiting to see what the head of the ECB says. Okay, so just wait for all these items to get clear, and then see if you can see something you want to trade. Okay. All right, so that's it from me today. Thank you for your company. Next week, if you want to join me, we're getting into the last week before a break for a week in Christmas. So things will start to slow down next week because of Christmas. Maybe Thursday, Friday will probably be the day slowing down. Friday will slow down, but it probably won't be busy all week. Maybe busy Monday, Tuesday, Wednesday, but then maybe getting slowed down. So next week I'm on Tuesday for more analysis. So let me just refresh. I won't refresh because it takes ages to load. So that's us today. So beg your pardon. This is us today. So Tuesday 19th, I'm back with you at 8 p.m. for more analysis. I'm going to start the series on smart money concepts, part 1. Starts on the 20th. And then more analysis on Thursday the 21st. That's the last day of the year for me. And then I'll be back on the 2nd of January. All right, so if you want to see me next week, just come over to the webpage here for the webinars and register your interest. Other than that, have a great rest of the week and great weekend. I don't know where you are, but where I'm on the Gold Coast. It's red hot here at the moment. So I don't know where you are, but hopefully you're having some nice weather as we're heading into the silly season. And take care, and I look forward to seeing you next time.